Hello, how are you doing? Welcome along to FTUK's weekly catch-up live stream. Hope all is well with you and you've managed to find some sort of success or comfort in the market this week. Not been easy, has it? Not been easy at all. The conditions remain particularly difficult, and I want to do something a little bit different today. I want to talk about how to cope with these kinds of conditions. I've been trading a long time, and what tends to happen is you tend to get periods of time. There tend to be pockets, like the remember 2020, the COVID thing, and the volatility really kicked off then. Lehman Brothers, obviously in 2008, things really kicked off then. The flash crash, the gilt crisis as well a couple of years ago. You get these little pockets, or the Fukushima nuclear disaster, remember that one as well. You get these pockets of volatility. They're not here forever, but they do kind of mess with your mind a little bit. And we'll talk about that today because we've had a lot of successful traders that managed to sort of like carve some money out of the market this week. And then a lot of people that have kind of like scratching their heads, kind of like, I don't really understand why my strategy is falling apart and it's not working. It's really because of the changing conditions, and it's just something you inherently have to get used to as a trader. And there's definitely some tips and tricks and stuff that I think that we can discuss to maybe sort of signpost people in a different direction so that you can not feel overwhelmed, because that's what it is. It can be overwhelming, and learning to trade is particularly difficult. There's no question about that. So it's a live stream really dedicated to some educational stuff that I think is particularly important to discuss around this sort of time. As always, of course, please subscribe to our Discord and go speak to Reza over there, and that's the best place as always to find all of the new stuff that is happening at FTUK at any particular point in time. Let's jump in and let's discuss what we are going to be doing today. Now, it's a question of understanding how to survive for a lot of people. And when you learn your strategy and you learn what you're doing, most people don't tend to have the worst case scenario baked into their skill set. So it becomes very, very difficult. So how do you deal with volatile markets? That's what we're going to discuss today. I broke this down loosely into 3 sections, but of course it's all interconnected. Surviving wild markets, because we have had a lot of wild markets. One of the traps that a lot of traders fall into when the volatility starts to pick up, and then how you can actually sort of like manage that so that you always, at least if you can't make huge profits during these conditions, you can actually sort of keep your account safe, because that's what it's all about. We're all risk managers at the end of the day. And also as well, I want to highlight a key bad habit that's connected to all this, which took me years to fix. And I found a very, very good solution. I want to share that with you as well. So I'm sure there'll be lots of people watching this. If you stay watching it, you'll understand exactly what I'm talking about. And I'll show you the mental fix on actually how to overcome it. So let's dive in and let's just examine the landscape. We've had big moves in April so far. Look at those on there, some of those numbers. The dollar index down 3.36%. Against the yen, 648 pips. A little bit less on the euro. Obviously, the euro's gone up massively over the last few days as well. 448 pips yesterday. From yesterday. The pound against the dollar, a little bit more range bound, but still we've got 500 pip range in there. These are the kinds of things as an intraday trader can cause you a lot of problems. Gold, obviously, massive whipsaw on gold. It's pushing all-time highs again, I think, this morning. Look at the Bitcoin, though, 15%, so just under 16. And look at the indices, 17% on the Nasdaq, 16% on the S&P 500. So these are big, big, wild moves in markets, and it does carve people up all the time, and it causes a lot of problems, a lot of frustration. It doesn't have, what you always remember when you get a storm like this is it will rectify itself, and then normal sort of like conditions will be present again. But these things, they do happen, I would say, every sort of like 2, 3, 4 years. It's not exactly a market crash, but it is a fundamental news global shift with the trade wars with China, and it is difficult. It is difficult to figure out. So these kinds of things that go wrong. People tend to get chopped up all the time when they suddenly realize that their strategy has stopped working the way that they think it should, or they think that the market is now behaving in a way that the market shouldn't. But of course, we are slaves to the market. We don't get to tell the market what to do. We have to adapt to the conditions in front of us. Usually at that stage when people get frustrated and things are not working, particularly if they've had a really good start to the year, then their strategy tends to sort of fall apart a little bit. The position sizing that they've got, that they've been sticking to rigidly, tends to sort of go out the window, and they start to sort of throw all sorts of different sizes around in the market. And usually the biggest thing that falls apart is their risk management. It gets a lot harder to do because you can't, if you're working intraday, for example, you can't work with the same position sizing. Your risk management has to change, so you have to sort of lower your size. Maybe you have to move your stops out a little bit, and what some people do even more dangerously, they find it hard to move those stops when they're trying to buy into a large spike to follow that market volatility, or maybe even worse, they remove their stops altogether, and then they just turn into out and out gamblers. This is the kind of process. Now, I'm sure there are a lot of people that will watch the stream that will totally get where I'm coming from on this one. So it's very, very, very challenging to actually work with. Now, let's look at, we're going to break this down technically. This is what is actually happening from a sort of like a market point of view, and how that connects with how people trade. And it's basically volatility is expanding. Now, that's nothing revolutionary in itself, but the point of saying that is that human beings, by default, we work better, we think better, we behave more optimally, if you like, when volatility is in a period of contraction rather than a period of expansion. And the reason is very, very simple. It's that mentally, we only ever have what is on the left-hand side of the chart to go off. That's all we can do. So if you have a chart that is giving you a neat sequence of contracting higher lows and lower highs, and it's falling in on itself like that, like a symmetrical triangle, I mean, it's one of the ways that patterns get formed, it's very easy to work with because you've always got these reliable key swing points to work with on the left, and you can hang your hat on them. Yeah, and you can sort of work with it and you'll get something from it, good stop placement, all that type of thing. As soon as the opposite starts to happen, so you start to place your stop loss in there, but then you get washed out and then the market then moves in the direction that you want, or maybe you short the highs like that and then you get washed out and then the market starts to do what you want. The volatility is expanding, you're getting chopped up. So as human beings, we do tend to work better in this scenario than this one. And you've got to, what's really going to define your success is your ability to see one against the other and then take action. And that's a lesson that takes a long time to learn. And to be honest with you, it's not really something that you can read in a book. It's something that you have to experience. And as you go through your trading career, you will lose trades, you will lose lumps of money, or even lose trading accounts on not understanding the cross point in how this actually functions. But that is what's going on in the market from a volatility point of view. Now, what can you actually do to save yourself in this situation? Well, there's quite a few things actually. They're all relatively obvious, but if you do start to behave like this, you will start to see the benefits. First up, as always, step out. Once the ranges, the daily ranges start to expand, and they have been expanding, you should not be just thinking, okay, 5-minute time frames, here we go, and wow, I'm making fast money, isn't that great? Because you're gonna get carved up. Always step it out. Bigger time frames, even the 4-hour, the daily, something like that, and that is how you can reframe your strategy. But that then means you have to lower your position size. You've no choice, because we are risk managers at the end of the day. And what it also means as well, if you do lower your size, it gives you the ability to work with a wider stop loss. So you start to think of some of the intraday timeframes mentally in the same way that you would think of a 1-minute chart or a 5-minute chart. That's all, you're just shifting your frame of reference, and that does tend to help a little bit. The other one, and this is a golden oldie, I mean, nothing new on this one, but take a break. Yeah, take a break. The markets will be here tomorrow. When you're losing money time after time, the best thing to do is take a step back. And if it's not working for you, come back tomorrow. Always remember that the markets, they keep spilling out the opportunities. And the period of volatility that we've got right now, it could get worse from here over the next few weeks. But it won't be there forever. It just isn't. That's just not. It's the same with that trends do not last forever. Once they end, they go into range-bound markets, and then the range doesn't last forever. It's the same with this kind of like expansion and contraction in volatility. When exactly is it going to end? I don't know. It could get worse from here, but it's not going to be here forever. And you don't need to trade it. You don't have to trade it. Particularly like with FTUK, there's no time limits on these on the account, so you can sit back a little bit. I mean, I think you have to be active for within the 30-day period at least, but you have got that capacity to take a step back and not be as active. If you want to go a little bit deeper, research the effectiveness of your strategy across different levels of volatility. That's a good one. Probably something that some of the more serious guys will do. Maybe you need a different strategy. There's no rule that says you have to just have one strategy. You can have low volatility strategies, high volatility strategies. In the same way you can have a trend following strategy and a range bound strategy. Maybe you work with one, that's fine, but if you are going to work with one, then start to back test it. We just come off the back of our back testing week. You've got access to so many tools these days for back testing. You can test your strategy for different levels of volatility, and that is something that you will learn, because that's going to give you confidence if you do encroach markets that are a little bit difficult to work with as they are at the moment. Don't trade correlated markets. I mean, that's a simple one as well. Why? Because when things are moving fast, I mean, there's been several points this week when I think there's been sort of like stuff from Trump that happens very, very quickly, and then it changes, and then China have come back in and made some sort of counter move, and that happens fast. If you're trading correlated markets, the algo's pricing things very quickly, so you can make things even worse for yourself by trading markets that are going to be moving in tandem at the same time. And also as well, keep an eye on the news. Have the news in the background. Get yourself a Squawk service. Get Bloomberg on in the background, something like that. So as these events are unfolding, at least you've got an explanation to why things have suddenly kicked off and you didn't understand why. Yeah, if you've ever been part of a trading community over a number of years, there's usually always one guy that will write in the room what just happened. You don't want to be that guy, trust me. If you want to get better at trading, you don't want to be that guy, what just happened, which is why, for me anyway, fundamentals is such a big part of trading. You can't avoid it, but at least at these times, have it in the background. You also get the educational value of that, because you learn what the impact of news has on the actual price action. What does that mean, the Trump tariff, when he's made a U-turn decision? What does that equate to in dollar terms on the S&P 500? How far did the market move in either direction? Was it up? Was it down? How far? That is really, really valuable education. It sort of builds your trader reflex inside your head. It is very, very important. Let's talk about the trap that most people fall into when we end up in conditions like this. This is really important to understand as well. And it is quite obvious when you think about it, but it's really the components of this that I think will lead us to understanding how to fix some of the key problems, or certainly for me would have been a massive problem. I haven't actively traded this week with FTUK, but this is the kind of thing that would cause me a lot of problems, and I will show you how I would start to unpick it, to find some of the issues and start to fix them. And it's really simple. It's over trading. Once you're in a state of uncertainty where things are confusing, you don't understand what's going on, what can happen is you get into a state where you're over trading. You lose sight of your ability, of your strategy and how it's working, and you tend to do too much, not less. That is always how we would describe really as being over trading. Too many trades. You get locked into a bias. Maybe you change your style. Maybe you were a swing trader, and because you can't cope with it, you start grabbing profits on an intraday basis, and then think, okay, well, I'll just scalp. So you've just dropped all of the research you've done over 6 months and become a scalper just because, for what, And you end up then doing too much, and you've not really sort of tested it all properly. Or even worse, you start to hemorrhage money into the market and you become a revenge trader. This is a very, very, very common component of these kinds of market conditions. Now, one of the things that happens, and this is really where people struggle the most, is quite often the effectiveness of their strategy will still be okay, as in they still produce good trades. But the overtrading and the various different problems that people have, what happens there is they tend to overtrade on the losing side. So they'll tend to have good trades within their strategy that are still producing results, but they've got all this boatload of rubbish, all these really dreadful trades that they then wish they hadn't taken, which offset the edge of all of the good trades that they've made, and that basically starts to erode the value of your edge in your strategy, which adds to more confusion. So you get all of this stuff, it starts to really, really compound itself. So it's really the in these conditions, it's the myriad of extra small bad trades that get created that offsets anybody's good performance of their strategies. So a lot of those good trades will still exist. So to a certain degree, what you need to do in these conditions is not necessarily stop trading your good trades or your good market setups. You need to remove some of that rubbish that you're going to end up in. Why? Because you're going to get whipsaw moves that are going to stop you out of the market in a heartbeat, and you're then going to be thinking, what's going on? Yeah, that is the compounding stuff that adds up and takes away from you the positive edge of your strategy. So this leads me into a good fix, and I think this is something that took me many years to kind of like tune into, how to fix one key bad habit. And this is connected with overtrading, and this one thing really helped me a lot in my early development as a trader, and it did take me years to actually crack it. Let me outline the problem, and it's connected with overtrading, and it was really basically this: market flexibility. I came from a background where you ingrained the bad habit very quickly that once I'd done my analysis, I would trade that and I would expect that to happen. And the problem is, if the market didn't confirm my view, I would keep going at it. I'd keep trading over and over again, and I couldn't then think in another direction. I wasn't flexible. So I'd buy the market, and the market would hemorrhage against me, and I would be thinking, no, I'm long for the day. I am buying this market today. And I would end up in a situation where what I really needed to do was go in the other direction, and I couldn't do it because I had a very strong bias. So as you can see, I've written on the slide there, and this is true, some of my worst trading days, just like really trading S&P futures many years ago. So my worst trading days were because I tried to trade in one direction and that wasn't working. And rather than connecting with the price action, I'd spend all day just buying dips in the market, trying to buy the lows and sell the highs. Yeah, I'm sure we've all been there. And every time that I'd get stopped out, I'd wait a little bit and I'd get back involved. Right, this is the low. And when I look back at the day, I would have just been on the wrong side of the market all day. Or even worse, I would then get to a crisis point where I'd give up and I'd then short the lows, and then the S&P would rocket, and then I would lose on the other side. So you'd look back at the day's performance, and I lost all the way down in one direction and all the way on the other direction. That happened a lot, you know? So this is the sort of thing when you get this kind of volatility, if you lock your mind into a bias and you lose the flexibility, and it took a long time to fix it, but fix it you can do. Let me just outline what this actually looked like. So you'd get it here. You see it on this chart here. So imagine this is really intraday work, really. You imagine that you'd buy that, okay, right, I'm buying the lows here, and then off we go. And you would start to make a little money, and then you'd get stopped out. So you'd wait it out, okay, this is the low now. You'd get involved again, and you'd get stopped out. That process. Now, what's interesting, I used to describe it as being like a growing tightness in my mind, as in the longer this process went on and the more the market went against me, the harder it got for me to turn around and actually sell in the other direction until it was too late. Yeah, that happened time and time again. When you'd look back at the day and you'd look back at your performance over the weekend or something like that, you'd look at it and you'd think, well, really all I needed to do was turn around. If I'd have turned around, if I'd have been wrong 2 or 3 times in a row, if I'd have turned around and shorted in the direction, I'd have neutralized those losses and I'd have been fine. Yeah. And the more the market went against me, the harder I found that process. So it's like, how do I actually crack that? And then there was a guy who used to help me a lot with my trading in sort of 2010, 2011. I used to watch him live stream his S&P trading on a daily basis, and he had the flexibility. If it went against him, it wasn't right, he would short the lows and he would just join in. And I sat there and I thought, clearly it's possible. Some people can do it, but I couldn't. And I thought, okay, that's a mental fix that I need to sort of like crack. Now, this is basically the science behind what's going on, and it's mentally in someone's mind. What they do is that they don't connect, they don't really understand the difference and the connection between risk and probability, because what they do is that they're always searching in the market for low risk opportunities. And yes, at that particular point in time, you're buying the dip, you can have a tight stop loss, looks like a low risk low risk opportunity. If the market then pings up from here, then obviously I can have a great risk reward ratio, and that's it, I'm a hero. Yeah, so I am a low risk trader, and it's working with my strategy. But what's lost in that is that although I see it as being low risk, it's also low probability. And that's the key point. This is the reason why this doesn't work. So each of these opportunities to get long is a low risk opportunity, but it's very low probability. What becomes harder as a retail trader is to then understand that as the market then moves, by waiting it out, once the market moves in that direction, this over here now becomes a much higher, it's a higher risk long, because you would have to have a wider stop loss if you were to sort of wait for that initial volatility to start, but the probability is higher. Yeah. Now, the guy that sort of like did a lot of work on this, who's worth researching, is Al Brooks, who's obviously a big guy on the internet these days, has a great community and everything. But from an educational point of view, this is the reason why it doesn't work. It's the understanding of low risk can also pretty much mean low probability. Because as the market's trending down, the odds of it now turning around at this particular point in time are lower. If you wait for that to actually happen, the risk goes up, the risk factor, because you could still be wrong, but the probability of it working is also higher. And that is it. That is the key. Really important lesson. Now, that is essentially the mental problem when you break it down. Basically look like this. What I hadn't done in developing the bad habits very early on in my trading career by locking myself into this bias is understand that what I need to do is I need to let my mind feel the positive effects of turning around. And until I can allow my mind to feel that, to experience it, I'm never going to get out of this pattern. As in, I'm always going to be this guy buying the lows and getting stopped out and just hemorrhaging my days. So when we talked before about having a good strategy that's going to give you some good trades in these kinds of conditions, the problem is you've got these kinds of issues where you then create a whole sort of like trading account full of bad small trades that then offset the good trades that you are going to make, and that ruins your edge and it ruins your performance, and it can ruin your trading month. It's a really important thing. So this is how I went on to actually fix it. This is very, very cool, and I promise you this works. And I know that because it took me a long time to develop. And I did it for myself, but it takes work. It takes work. It takes work and discipline. Now, this is all intraday work. Yes, you can do it from a swing trading point of view or a bigger picture point of view. And I'm a much bigger picture time frame trader now. I don't really work intraday at all. But to benefit from this quickly, you've got to do it intraday. Yeah. What I noticed, if you have this psychological problem, and those that will recognize it will know exactly what I'm talking about. I used to have I would put like an indicator on my chart. I have a parabolic indicator on my chart. What I started to realize was that although I am wrong, the parabolic is always right. The parabolic's always ends up on the correct side of the market sooner than I can. So I realized if I could just line those up a little bit, I could somehow maybe start to unstitch this bad behavior of not being able to be flexible in the market. So I thought to myself, well, can I design an exercise around this? So you can see the parabolic there as the market is trending down. The parabolic is actually on the correct side of the market, whereas me, I'd be buying the lows all the way down. Okay, so what do you do? So what I realized was if I built an exercise and trained myself intraday, I could actually start to unstitch this and make make some attempt to try and become the trader that I wanted to be, rather than getting locked in this this mental frame of mind. So this is what I basically did. I would pick any market on a fast time frame, 5 minute, even 1 minute if you want super quick feedback. And obviously do this on demo accounts. Do not this on funded accounts. This is just an exercise. And anyone that's used parabolics, by the way, to try and make money on an intraday basis, forget it. It's a great tool built by Wells Wilder. It is phenomenal, actually. But just as a buy and sell signal on a fast time frame, forget it. This is not a trading strategy. This is an exercise. So do it on demo accounts only. No one's got an excuse. There's plenty of demo accounts out there. Get a fast time frame and do it for maybe 6 weeks. You go into the market with your strategy, however you're doing it, and you see your opportunity and you trade. You make the trade. And if you get stopped out 2 times, at that point, you put the parabolic on. And the parabolic will tell you, you lean into it as a crutch, and it will tell you exactly where you should be going from here. So it will probably tell you that you confirm that you're on the wrong side of the market. So instead of you getting locked in and keep buying those lows, you then do one thing and one thing only, is you let go and you sell at market. You go in at market and you just ride it out, whatever happens. And what will happen is once or twice you will get chopped up. But eventually, if you do this every day, trade it during the London Open, euro dollar 5 minute charts, any dollar pan against the yen, thin market, crude oil, gold, something like that. Fast time frames though on demo accounts. What you'll start to see is you'll get opportunities where you do go in at market, you do a couple of wrong trades, you do turn around and go in the other direction, and then you start to see that it works. And you follow the parabolic down, and then you just offset it. So you don't view the parabolic trade as being something that is there to make you money. You do it, you see it mentally in your mind as something that is only there purely to offset the mistakes that have just occurred. Start to do that and practice it, and you'll start to see that occasions occur where your behavior of turning around in the market and going the opposite direction starts to yield a positive result. That's absolutely huge. So I started to do this for the first time after years of sort of like, early career having this horrendous bad habit of not having this market flexibility. For the first time, I started to see, wow, it works. And this is all like if you study the psychology books on trading, you'll start to see that once your Steve Peters, the chimp paradox, that is a really good example of understanding how the subconscious mind is like a series of computer algorithmic programs. And what you're doing is you are drilling in to the subconscious aspects of your mind where you've built these bad habits. And this is not new. This is how sports psychology works, how military training works. Breaking down these problems so that you can reprogram these little areas of your subconscious which are locking these kinds of behaviors. You start to see that. And the science behind that says that if you repeat these kinds of processes and you allow your subconscious to experience the positive effects that you're looking for, I think the actual number is about 68 times. It's certainly less than 100. But if you do that, you end up in a situation where you've fixed the problem. And it works. That's the exciting thing. It actually really works. This really does work. And I spent at least 2 or 3 years not understanding why I couldn't be that guy that would be wrong and then start shorting, offset the losses, and then start to see a positive result. I couldn't understand why. And by training myself with this exercise, it actually worked. So keep it nice and simple. Demo account only. This is just for training purposes, but you will start to see that it works. Now, those that have experienced it will be able to figure this out quite easily. Let me just show you on a chart here an example. So that's it there. So the parabolic is an amazing indicator. Really, really, really good indicator. Totally useless to buy and sell on a 5-minute time frame. Do not do it. It will not help you be profitable. That's for sure. But it has its uses. Very good for exits. Very, very good for exits. Also, as well, parabolics are very, very good when you get one of those very, very sharp moves and you want to join in, but you don't know where. Let the parabolic tell you where you'll find that initial support. It's very, very good at doing that. But you can see here's an example. So you maybe, for example, you see this candle here. Let's just make it nice and big. What is this? This is the euro against the yen. This is on its 5-minute time frame, and you can see it there. So you see there, maybe what I'd be doing is I'd be shorting in here. Why? Because look, we're starting to go down. So I'd short here, and I'd short here, and I'd short here, and I get locked in, and I'd be short, 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 all the way up. And then what I'd do is I'd buy here, and then look, you go literally nowhere. Yeah. So what I would do is I would say 2 trades only. 2 short trades here. That's it. 1, 2. If that's not working, dump the parabolic on. And as you can see, the parabolic here is on the right side of the market. Okay, let go, buy at market, and do whatever. If you get stopped out, use the parabolic, and that's it. You have to accept it. But you'll start to see lots of occasions when what happens is the short trades that you took as losses here start to get offset by the correct behavior on the long side of the market on this one here. And then all of a sudden, that problem will start to dissipate. It is very, very cool. It's very powerful. It's just an exercise, that's all, to modify your subconscious so that you can have that market flexibility. And the reason for going on this whole journey of discussing this is really because in times like this, when you've got these kinds of volatile conditions in front of you, you'll find that this is the perfect breeding ground for bad habits and frustrations, and all of those bad habits that you have developed as a trader, as you've been learning, they will all be there. You'll feel them and you'll see them, and because we've got speed in the market now, you'll get very fast feedback on it. So you'll see the perfect setup. You'll go in and then bang, you're stopped out. You're thinking, what is going on there? Yeah. So you have that happens all the time. So this is the sort of time when you're going to get that kind of flaring up of bad habits, which means you can highlight them, which means that you can start to fix them. Now, for me, this was one core thing, because by fixing this, I will start to remove lots and lots of little bad trades in my trading performance that are offsetting the good trades, because the opportunities in the markets with these kinds of conditions are there. And I know that because we've had lots of successful traders all week that they're making bank, they're doing well. So the volatility, we need the volatility. It's how you use it and how you start to break it down as a trader and how good you are at coping with it. So I know there's a lot there. There's a lot in all of that. But if we manage to at least reach at least one person that kind of goes, yeah, I get it. Yeah, oh yeah, I understand. Yeah, then that will have been worth the effort and job done for the week. And that is part of the trader development. Very, very, very powerful stuff. Okay, right, that's it. So another busy week in markets. We've got one more thing just to touch on. We've got a weekend offer for you. We've had a great week of offers throughout for the last few days at FTUK. We've got a fantastic 20% discount, just a straightforward discount across everything for the weekend. So if you are looking to get involved in your prop account, or you're looking to get another prop account with FTUK for the next few days, FTUK20 is the code that you need at the checkout. Drop that in the coupon code box and you get an instant 20% off everything. And you can make it 25 if you pay in crypto through Confirmo, because you get an extra 5%. So it's not a bad deal to go into the weekend with. That is it. We are all done for another week. So I hope you managed to survive the volatility for this week. I suspect we're going to get a bit more next week as well. The trade wars, it sounds like a bit of a mess, but that's where volatility comes from, and that is where our opportunity is. Have a fantastic weekend. Thank you very much for joining me, and we will see you all next Friday.